Starting. All attendees are in listen-only mode.
Hey everybody, what's going on? Jamie Saettele here. It is October 12th, 2017, and doing the midweek webinar here on Thursday. Kind of listless trade for the most part yesterday, so I was like, wait, might have more to talk about, on Thursday, but probably not the case. I probably would be saying about the same stuff that we would have talked about yesterday. Excuse me. Let me make sure that you guys can hear me. Pooja says AV is good, wonderful. Nice to have you in the room here, Pooja, and everyone else. Peter says AV is good, all good. All right, great. I have a chart of crude oil up here because the inventory figures just came out, and let's see what they were. Crude oil inventories fell. Okay. Gasoline inventories rose. All right. Not a whole lot of movement here. You have a very slight uptick in crude. We will get to crude, but we're going to start as usual with some dollar stuff here. So just a few simple observations, right? A few simple observations. Let's take a look at this DXY weekly, okay? And if I were to just put up a line chart, right, just so this is just closes, from a very basic Elliott standpoint, right, markets tend to move in sequences of 5 waves and 3 waves, right? So what do we have here? The second and fourth waves are your interrupted periods within a trend. Well, we have a leg down. This was the first interruption, right? At this point, everyone's still really bullish the dollar. And this goes right into what I was talking about with the headline from the journal from like 2 weeks ago, or 2 days ago. There was that headline that noted the dollar rally, but the dollar was also battered, as it was described, right? Yes, here we go. So this type of headline, I go off on these tangents sometimes, but there's a reason for it. Battered dollar climbs back. This is such typical, perfect illustration, really, of what fourth wave psychology looks like in a market, right? It's still a fight, right? You still have the word battered in there, right? Where if that was a second wave headline, it'd be like dollar soars, right? Or dollar, it'd probably be something like dollar set to gain more or something, right? Probably a prediction in there. Those are always the best ones to fake because that's when the psychology leaning one direction is the strongest. And that's what produces the third wave lower, right? Is all that unwinding, right? And the realization that the trend has changed. Vladimir, how are you? Dollar, CAD, and copper, you got it, my friend. Those are on the docket. So what we end up with is a 1, and then the first big interruption 2. Don't worry about trying to count all the little ziggy-zaggies in between, okay? And then, the levels have been beautiful, right? We were able to correctly identify the low more or less to the tick on the gap down here in early September, and then the rally back to 94.08 did stretch a little higher, 94.27 right after NFP, and turned down. So this is, you know where my head's at. This to me is a fourth wave. Okay, this bounce is a fourth wave. And where we ended in the fourth wave, it tells me that, again, such a well-defined level, right? The August 2016 low, August 2017 high, tells me that the high for the move may very well be in place. That doesn't mean that the pattern's complete, though. right? Fourth waves are usually much more involved, much more difficult, okay, than second waves, right? Second wave, kind of sharp, right? Fourth wave, I'd be expecting, and I know that there's the prospects of this big head and shoulders bottom here going back to August. And you know what? That's something that I'm aware of. That's okay. You know, if that does happen, we'll figure out a way to play it. Okay, but and hint dollar Swiss. But to me, this is the one, or sorry, A, B, C. Okay, this is the first leg up of what's probably going to be a triangle. Triangles are really common in fourth waves. So that means that we are in range trade mode. You know, don't have a super strong dollar directional bias probably for a little while here. I'm willing to kind of trade just the levels on both sides. I mean, you always want to trade the levels, but you know, it's not like we're, you know, back in May and stuff where it was, I didn't want to be long the dollar at all, right? So that's that's what I'm thinking. So let's just real quick, let's do a, you know, when you're looking for the top of a fourth wave, right? This is log scale, first of all, but you're looking for the top of a fourth wave. You are looking for the parallel to the wave one, wave three trend line. So we're going to take that and we're going to extend off the top the same degree, 33 degrees, 33 degrees. And lo and behold, we have a perfect match. So there's another reason to suspect that your dollar top is actually in. Again, in price, not necessarily in pattern. It's, you know, a triangle would look something like this, right? We could be like, you know, boom, right? And then we could dump later in the year, which would actually fit the seasonal tendencies quite well. Dollar's typically an underperformer in December. So there's where we are. Now here's another simple, useful piece of information. Okay. What's that? Daily. Dollar daily. Yeah. Just throw yourself an RSI up. And again, in good downtrends, you tend to peak out in price when RSI is at 60. So the same can be said, the opposite, of course, for basically anything else, right? Euro, of course, going to be the most important. Bottom, looking for that RSI on 40, right? Even cable, pound, which I know is the recent decline has felt, you know, some pretty intense, but same thing. You know, every low this year, in fact, has been not necessarily on 40, but it's been before 30, before the oversold condition. And this one I tend to place a little more weight on the bottom that we have, you know, from on Friday, I guess, because what you've got is an overbought condition before this drop into 40. That's a positive. Okay. So we'll see how this cable trade works out, of course. But again, 33.65 is where we're looking there. Okay, let's go back to the dollar real quick. And what's going on? Gold's up $6. Let's see here. Silver, copper, crude actually holding its mini gains after the number. Nicholas says, what about the analog? Yeah, so glad you brought it up. We'll talk about it. Let's get there. So it's a weight of evidence thing for me, right? Here's what I'll say. Let's go to the, what the heck is going on here? Why is this chart all wacky? Okay, that's better. All right. So yeah, Nicholas saying, what about the analog we were looking at? So here's the analog. This is actually, by the way, this is the Bitcoin analog. It's possible that Bitcoin's about to go to 12,000 before crashing. So Just throw that out. Remember this is this compared to silver from the 70s, late 70s. Talked about that before. All right, DXY. So this was the analog we had. Looks better on the weekly, as most things do, right? So we were kind of thinking at the time, we were looking for the low back here in September, and then suggesting maybe, a trade up into, I guess, 95. With these things, obviously you never expect it to follow perfectly, although sometimes it does. But the big thing is the time, right? So we talked about just now this fourth wave, deal, possibility, what have you. Put up the Elliott channel, the level. For me, and the momentum that we just talked about with RSI peaking up on 60, to me, that says to me that you have enough information to say that there's a high within a downtrend in the dollar, right? However, as Nicholas pointed out, the analog says that, you know what, the dollar doesn't get really bearish until, it can play this out, right? And it doesn't mean that it has to go to 95 though. We could go sideways until 1113 too. Okay. So that is, if I'm kind of putting together a story, what I think, may happen, which really doesn't matter. It's more about trading tactics, but, this is something that's in the forefront of my mind. Okay. And like I said, there are charts out there where, we're willing to look at basically being long the dollar around here. One of them's the Aussie, right? We have that Aussie order. So if this is going to happen, if you are going to get a bigger dollar rally, hopefully we have some of these orders that trigger that where we actually catch it. Okay. So yeah, it's not a clear cut dollar down or dollar up from my standpoint. It's be nimble on both sides of the dollar here. And actually seasonal tendencies would suggest as much. So if we pull up the seasonals for the dollar, okay, you actually come into a dollar low here after this week, okay, and then you tend to go higher, and that's higher through most of November, and then you have the seasonally bearish period that starts, kind of mid to end November. A lot of this is actually, I know this is DXY, but the most pronounced of this is dollar yen actually. So, all right. So let's move on to some shorter term levels to pay attention to in DXY. So DXY, this is a 4-hour chart for DXY. And the level, so you see here the underside, right, of the old channel, which was support. We got the big break in July, and that's kind of accelerated at that point to the downside. And what I would be looking actually is at resistance around that area. Okay, give it some room, of course, but you get the idea. It crosses through a lot of important price action back here, and just because we went through it for a day and a half or whatever last week does not mean that it should be completely ignored. Okay, so that's going to be up around the 93.60s, 93.50s, 60s, depending on when you get there, right? And then the support region that I would watch for in the near term is also based on these parallels and some horizontal levels, and that's going to be around 92.50, 92.60. Okay, that is what I'm looking at with these levels. Okay, well, you got the trend line here too. So the 9.8, 920 trend line. So those are the levels to pay attention to in DXY. Okay. What about the other dollar index? Going to have similar price action here, in the sense that we topped on NFP, or right after NFP. You know how this rally here, 1, 2, 3, 4, 5, 6, 7. That's how I'm counting it as a double zigzag. You know, so I know some people were looking at this as maybe being an impulse. Maybe this is 1, 2, 3, 4, 5. I mean, doesn't really matter a whole lot. Just pay attention to the levels. And here I'd be looking at around 11,991 for resistance. This is the shift fork. Okay, if we go down to log, and I go down to log, you can see that this index is trading clean as can be on these parallels. So this is a channel. This is not log. Again, there's no hard set fast rule on what to look at, whether it's log or arithmetic. When you get to longer term charts, I do prefer log. It makes more sense to look at log. But if you're seeing more reaction on the, you know, on the parallels on a different, you know, on linear, then that's okay too. All right, stick with it. So we have seen more reaction on linear stuff, including the underside touch, the median line on Friday after NFP. So again, the same thing goes here as far as this is the biggest rally, you know, after the top, excuse me. And this is the second biggest rally after the top. So it's probably the fourth wave. Okay. As far as support on this one, you see this magenta line, or I'll make it magenta. That was support here, 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 resistance, resistance. I'd look down there. So that'll be in your kind of like 11,890 or so in terms of potential support for this dollar index. Okay. All right, let's take it to euro. One thing with euro, really clean short-term levels, as you know, but one thing I've been looking at with euro. So remember, one of the reasons we were looking for the top two in July, or sorry, in September, was the fact that we had spent 9 weeks above 30 in RSI, and that doesn't happen too often. In fact, it happened over here in February, March 2003. We did get a quick dip, and then we ran higher. With the extreme overbought level that we did get, that does not make me, that may be bearish at the time, it doesn't necessarily make me really bearish dollar right now, okay? Because we have pulled back, and on the daily, we've already corrected that overbought condition. Just like back in 2002, right? We were coming out of a massive base in euro. We topped, and then we went sideways for months, okay? Does that need to happen here? You know, also just like in 2002, we topped, we pulled back, and guess what we held? The breakout high. Well, we've done the same thing here. We topped, pulled back, and guess what? We've held the breakout high. Okay. We could see something like this where we are sideways range bound for, you know, a rather extended period of time. I hope it's not that long, but, you know, something like another month would not be at all out of the ordinary for, you know, correction to work off the excesses of this advance. Okay, so when I'm thinking of, you know, periods in history, which really is what technical analysis is, and looking at the tendencies of what a market did The most similar period being the breakout back here in 2002 and the pullback from the extreme overbought condition, right? Says to me we could be doing something like this. So, we'll not try and predict what's going to happen, but rather we'll work with the levels that we've got. And those haven't changed as far as everything that's been written recently. Your parallel down here, this big blue parallel, as you know, that comes back, goes all the way back to a structure from the 2015 low. Would keep an eye on that for support in the 1760s, whether it happens, over the next couple of days or next week. And your resistance, again, 1890 to 1910 is really well defined from a trend line from high. This is the FOMC level, 1890, 1910, of course. Also, you've got the 8.2 high up there. So, saying all that, I would be just trading between, call it 119 and 117.60 for the foreseeable future. Okay, I think there's probably some good trades in there, right? Again, 1790 would be support if we get there a little sooner. Okay, but yeah, we're probably going to be doing something like this, right? I'd like to see one more poke higher to end the week, get that Friday high, and then maybe we can come off next week. Okay, cable. We've got same chart from last night, and we have dropped from the resistance area, which is this parallel here, right? What was the high last night? 32.60s. So we dumped, predictably, I guess the word Brexit gets said, right? They say Brexit, and then cable just gets murdered. So it's gotten murdered, and it's gotten murdered into the right place if it's going to go higher, right? We get a little bit of overshoot, but again, to be expected, I guess. And I like it higher. I like the trade at least. You don't know if anything's ever going to work, but I like the trade. I like the parallel down here. Okay, there's another level. It was support back in April, right? Support back here in June. Good resistance in August, even early September, and we've just hit it once more. So, like cable higher. If for, let's argument's sake, let's say that this spike low this morning actually was the low in the next sequence, you're going to get two equal legs at 33.59, which is right where we're looking anyway, right? We got the 20-day average up there at 33.60, the month open at 33.65. Okay, so I'm looking towards this region, Brexit or not. And the good thing about trading and trading FX 24 hours, of course, is that your stops are in. And if something disastrous does happen and you wake up tomorrow and pounds down here, it's okay because you will have been stopped out over here. Okay. As noted on Twitter here earlier, you do have, and we just kind of traded up to it this morning, but you've got the high volume level from this morning, I guess, whenever it came out about the Brexit stuff here, that you've got 31.76 is going to be some resistance. And once you get over that, I'd be a little more confident, I guess, in the upside for cable. Okay. But I mean, so far, at least today, the last few hours, you kind of have to like how we have stopped where, we kind of thought we would, right? And I think it's actually close to a 618 retracement of this rally. Pretty close. So 31.17 would be the 618. sometimes the really good trades, they don't give you the 618 to buy, right? They don't let you in that easy. So there's cable. No change for me. If, let's say alternate here, let's say if we do fail and this thing goes to hell in a handbasket, where are you looking? Well, the obvious level, I guess, would be the lower parallel, which would be below 130. Momentum-wise, $27.86 is the 200-day. That hasn't been touched. But you know what? We're not going to worry about it right now. I don't think there's reason to. Let's just, we've done what we've done, planned what we planned, and executed the plan, and it's either going to work or it's not going to work, right? And 33.60s is where we're looking. Okay. Again, I can't stress the importance too of where this low is from Friday, right? It's a big area. Same area that you were topping in May. Same area where we kind of really crashed from, right, a month ago. It was a year ago, October 6th, when we had the pound crash, the flash crash, right? That was during Asia. And wouldn't it be appropriate for us to do something bullish a year later? Okay, so that's cable. Dollar Swiss. All right, so this goes to Nicholas's point. Nicholas was just, we were just kind of talking, right? He was asking, what about the analog we were watching, right? Which would say dollar's actually, higher, for a little bit. And maybe it is. I don't claim to have all the answers here. Well, that would be where a dollar Swiss trade would come into play, okay? Dollar Swiss. So dollar Swiss is actually sporting itself a very clean, excuse me, a very, very, very clean bullish slope here. All right. It's clean as it gets, really. We've been trading in a contracting range on the upside, over the last month, right? Exactly last month, really, since, September 12th, 13th, something like that. Now, if we look at this 1, 2, 3, 4, you do have a 5-wave down here, okay, from last Friday. So I would actually expect to see resistance in dollar Swiss up, say, near 97.76, which is the week open, former highs over here, and then another leg down. But that's when you would get a solid bullish setup for the Swiss franc, or for the dollar against the Swiss franc, I should say. All right. So if we can get, let's call it an AAB. If we get another drop here, and you know what else you're going to have down there? You're going to have the median line, the bearish median line that was resistance back in August, okay, and September. So, if we can do something like this, get a rally, a drop, let's say where we would potentially have that. So 618 going to be just above there at 88. Argument's sake, let's go for 2 equal legs from there, get to 96.50. 2 equal legs from there, 96.65. Okay, let's call it 96.50, right? If we can get down to 96.50, at some point you might actually have a bigger setup on the upside for the dollar against the Swiss franc, and that would be your, insurance policy, I guess, if you wanted to say that, against a wildly bullish dollar, right? I don't think that the dollar is wildly bullish. I think that the top last Friday was an important top, but if we're totally wrong, or if I'm totally wrong, then this is a place where you might be able to profit from that. Okay. Okay, dollar yen. Dollar yen. Dollar yen, it's in jail, I guess, at the moment, but it is sporting some decent near-term slope. We have this slope again. I had it previously like this, right? But it was much cleaner off of the low prior. So the Asian low, which would be the Asian low on the 29th. And why? Because this slope much better definition of the angles that you have. Okay, you can see you've got the angles right here, tops. Okay, the tops in September are smack dab on that angle. Okay, it's the exact same angle. If I draw the line here, you can see that it's the same exact angle. It's literally the exact same. And then, of course, the red line crosses beautiful, beautiful support, support, support. If we ever get back up there, I would have thought that we would have gotten there by now if this was going to work out. But, you know, I know there's a lot going on. There's a lot of weird things going on with the Japanese markets right now. I shouldn't say weird, but different from what we've been used to over the last couple of years, right? You've got the Nikkei at highs that we haven't seen in 20 something years, but the dollar yen exchange rate, you know, is nowhere near those highs. Right? That would be the dollar yen would be at 125 if it was doing what the Nikkei is doing. So there's certainly been a relationship change there. But yeah, near term, you do see that you are holding, okay, this median line. And as long as that's the case, you know, why not just hold the long? It's a break even stop. You're either going to lose zero or you're going to make, you know, I'd be targeting probably 113 now, 113.10 because the red line's higher. But, you know, you get 80 pips or so or nothing. If we do crack below here, again, 20-day average keeps holding, median line keeps holding. So a break below to me would actually be kind of important. If we do crack below, then we're looking at this big, thick magenta line. You know what that is. It comes from the slope line that goes all the way back to 2011 low, which was Halloween. Which reminds me, we are getting close to that late October period when sometimes really weird, crazy stuff can happen in the dollar yen exchange rate. The Bank of Japan has shown a tendency for, or a penchant for doing spooky stuff on Halloween at their end of October meeting, which a lot of times is on Halloween. You know, so just a heads up there. You know, in a perfect world here, we get a little bounce into 1290. We get out, we go short, we drop down into the 111.30s or so, which is this, you know, this well-defined, beautiful slope line, right? Resistance here last September. Resistance actually on 10/28/16. So maybe it'll be support on the same date or around there. You tend to see weird stuff like that happen. And then, of course, it's been great support, okay, and then even resistance here in late August. So it's a wonderful reference point, and pay attention to it, okay? So, you know, for me, trading levels, really 112.90, and then this. You know, it's going to be in the 111.30s or so, right? So there's also, of course, the snap election thing going on with Japan, right? So that might be having some influence on the dislocation between the Nikkei and Japanese yen currency. All right, let's go back. Let's actually take a look real quick at the Nikkei. Crude. Don't forget too. Actually, I'll go to crude a little bit. I get sidetracked so easily. Okay. Mahai asking about S&P and DAX. You got it. We will definitely take a look. All right. Okay, so here's a weekly chart of the Nikkei. We are up, trading around the best level since 96, right? Next level to go to is probably going to be the 1996 high, actually, which is going to be 23,000 plus, 23,500 or so. Does this move have legs here? I mean, I'm not. This is a breakout. Um, you know, tactically speaking, I find it hard to buy up here. A 20,000 high from November 2015, followed by maybe 20,300. That zone. So kind of like low from 2 weeks ago would be an area to watch. And if you're going to get upside continuation after a pullback, then maybe that'll happen. But if we put up dollar yen with it, we can look at a correlation coefficient as well. Okay. And what this is going to tell you, I already have it on there. Hold on. Okay, so this is a 52-week correlation coefficient on the bottom of this chart between the Nikkei and the Japanese yen, dollar yen. It's currently 0.5. Okay, that doesn't mean that the correlation is 0.5. It's actually 0.25. Because the coefficient, you have to square that to get the actual correlation. Anyway, it's currently the lowest it's been since like 2011. Okay, and we've had times when it's gone negative. Last time it went negative was actually in 2011. So the fact that the dollar yen and the Nikkei are not moving together is not unprecedented by any means. It just hasn't happened in a long time. All right. So let's not be, dogmatic in the sense that, we don't want to assume that they're going to come back into play, right? It's certainly possible that you get a breakout higher in Nikkei and you actually decline in dollar yen. I'm just saying that is possible, right? So let's not try to look at the two as one and the same. Evidence is always a good thing, yes. All right. Dollar CAD. Let's go to dollar CAD. Okay. We'll go to the chart that you're used to that's been marked up here. Dollar CAD. Okay, so here's dollar CAD. We have the 4-hour chart. It's the same chart from last night. We bounced, did not quite bounce from 24.15, 24.20. It was 24.30 something last night. What I'm looking at though, what I'm looking at is this is now 5 waves down. 1, 2, 3, 4, 5. And no, wave 3 is not the shortest. Wave 1 is actually the shortest. Okay, wave 5 is the longest. And again, if you look at it on an hourly close basis, which is what R.N. Elliott himself did, you would see that there is no overlapping, so that's cool, right? We're not breaking any rules here. So that said, I'm looking at wanting to basically fade this bounce, sell this bounce. We hit 24.80s this morning, of course. That is the month open. Best place to sell this is going to be in the 25.30s. Okay, 25.30 is the close from last Friday. We call that daily reversal resistance, right? It's the high day and it's the close of that day. And you've got also the 618 with the drop. And then, of course, you've got this parallel, and this is short term, but I do give it weight, okay? So maybe we get in there tomorrow. That's the intersection would be tomorrow / Monday, $4 CAD, okay? As far as where we'd be taking it, I'd be targeting initially something down here, right? 2340s, something like that, 2350s, just the trend line here, okay? I'm not sure how much more juice is on the downside in dollar CAD. And again, with the dollar, my thinking is that we're kind of range bound for a little bit anyway, in the dollar. So, I'd just be looking down here. Okay, Aussie dollar. No change here for me as far as looking for this, 78.40-ish top, 40s, somewhere in that range, right? You have two legs up at 78.46. You would have, there's a parallel there. I'm fine being short or holding a kind of a near-term bearish bias on Aussie as long as you're below this 78.75 region, right? You can see all the highlighted areas going back to July and how big that area has been, okay? So, if we were to get back above there, I'd kind of go neutral, maybe even constructive on Aussie, but for now, I'm fine being with this on the short side. And remember, we do have this analysis, right? Channel from the 2016 low. 75 line resistance. So the natural inclination is to look for support on the 25 line, which would be lower. It's down at this point, it's now around 76, 75 or so. For me, just targeting if we're triggered, starts to turn over, I'm only targeting 77.20. That is the high from back here on June 30th. Got a square root level at 77.06 as well, okay? You can see the square root levels work out pretty well in Aussie. They have this year, right? Generally speaking, resistance, resistance, okay? Obviously, the 78, 75 levels, the biggie. Iman, what's going on, my friend? He's asking, what is the best level for shorting dollar CAD? Is it 25.30 if it came, or question mark? Yes, 25.30 would be where I would like to be shorting dollar CAD, absolutely. Especially if it happens on, an intersection up here, like tomorrow morning, or that would be tomorrow late, right? Tomorrow late / Monday early, Sunday night early, okay? All right, where were we? Kiwi, I'm make it real brief because Kiwi's turning up here. It's finally turning up, I guess. But your 200-day is now above price at 71.60. Maybe it needs to drop 2 equal legs. If it does drop 2 equal legs from the high in July, then you're looking at 70.06 as support. And you've got a square root level at 70.10. Okay? So, and the parallel trend line. Okay, from 2015, 2016. It was support, obviously, in 2017 in May. So that would be my best guess. Okay, if you get into that level, it's probably a long. Until then, I'm just going to sit tight, not really mess with Kiwi too much here. All right, metals, and I had a question on copper anyway, and then I had a question on DAX and S&P, and we'll look at crude, and then I actually want to look at some, kind of random weird pound crosses that we usually don't look at, but I have written about recently, and that'll probably be enough to wrap it up. All right, let's go to the metals. So you've got silver is much cleaner technically to me right now than gold is. That's a weekly chart. This is a daily chart. This is a chart. You saw this chart, I guess, a week ago or so when it said we were looking for that low in silver. We got it. Obviously it was after an NFP spike. You do have a potential kind of head and shoulders launching pattern here to take silver, a good deal higher. In fact, you'd be looking at a target of, initially probably $20. Although I would expect the median line to do something here in the mid-19s. So near term, you're right at the 200-day. We've had a nice little run from Friday's low. I'd be looking here. If for some reason silver does get a slam lower or gets dropped or whatever, the next correction, the level to watch is going to be 1685. That was Friday's close. As the NFP close, it was also a high volume day. Silver made a huge high volume day last Friday, so it's a very important level. It's also going to be on these parallels, same parallels that have been, quite important going back, almost 2 years. So, remember this when it comes to the metals. When it comes to silver and gold, the seasonal bullish period really does not begin until late December. Okay, so does that mean I'm like not willing to trade alongside of silver or gold? Of course not. Okay, the action speaks for itself. We've reversed sharply. I'm looking towards 1750 as an initial test. It's just a 618. But if we were to turn down from there, which I wouldn't be surprised because again we are in the more bearish period of the year, where gains may struggle to be sustained, then I'd be looking at 1685 as support for silver. And I do see that there's actually a pretty good horizontal level there anyway, right? March low, resistance here in June. Gold, not as clean technically from my vantage point. You did get a 618 retracement, right, of the prior advance from July, so that is a positive. We've traded around into initial resistance. It's just the April-June highs. So again, if you come off here, 1279, it's the month open, going to be where you want to watch for support in gold. But silver is kind of where I'm following for clues, if you will, on the precious metals. Silver looks, much cleaner. It looks like it has much bigger, more bullish potential, given the, well-defined head and shoulders possibility, where gold really doesn't have that. Okay. So I'd be looking, initially for gold, you've got the trend line up here at 1310, 618 to 1320. So kind of keep that 13-10-20 range in mind, but be on the lookout for opportunities if you do get weakness, especially if silver falls into that support that we just talked about. But the month open on gold is going to be a biggie at 1279. That's going to remain true for the remainder of the month if you do get back there. Okay. I guess you could have a 1, 2, 3, 4, 5. I'm not totally keen on that, but if we were to roll over here, then I'd be okay calling this 5 up and then you would have a 618 retrace. It would actually be lower than the month open, so I don't really like that. 50% would be close though. Anyway, don't want to force it. Follow silver. Silver's cleaner right now. Let's go to copper. Going for a stretch higher, extension in the 5. We've talked about this before, right? We hit beautiful support on this thing a couple weeks ago. I mean, these parallels are just magnificent. I don't even need this, right? Boom, boom, boom. And copper is on its way, it looks like, probably towards a log target, log trend line. So the log trend line on copper is going to be up here. That's going to be 329.50 or so. Okay. Go short term on copper, and what you will find is a possible setup. Okay. That to me is probably going to be your best bet. Okay. That is the trend line, retouch if you get it. So there you go. All right. So you can see how we did this pull back here. That was just a couple days ago. And then we took off again. I'd be looking for support around there. If you do get a dip within this, sizable advance. And, it's kind of like the dollar, right? You could have a period of sideways because if this is a larger fourth wave, which I think it probably is, you're going to coil for the next move towards the 330s. Then watch for support down here, okay? So yeah, just draw yourself your, previous channel, what would be considered the corrective channel. Then you get the breakout through it. You come back, the retest, and you go. If you're lucky enough to get that retest again, then I think it's higher. But the big level to know or to pay attention to is simply 329.50, which is the high from July 2014. Okay. Okie dokie. Let's look at crude real quickly. Crude oil. Actually making its way back, quite a fight. It was down almost 2% earlier. Now it's down what was it down? 0.9. To me, it's still sneaky, kind of bullish near term, right? I'm really holding out on the idea that crude is going to be able to head to 2 equal legs from the low from June, which gets you 53.94. Okay, and that's also the year open at 53.87. So if we can get up here, right, then I'm of the mind that you probably get a failure. And that was the long-term piece over the that I wrote over the weekend, the free piece. You're going to face a ton of resistance up there, okay? You're going to have, this is the long-term trend line, resistance line, which the red line you're contending with, that's going to be right up there too. It's a little higher actually than where I'm thinking, but it's going to be up near 50, shy of $55. Okay. And after that, you might get another drop. So near term, still sneaky bullish, still above the 200-day average. If we go to, say, a 60-minute chart, you can see, I count this as a 3 down, A, B, C, and this looks very much like an impulse higher 1, 2. Works for me. Okay, so obviously continue to fail around the median line. This is clearly an important channel or important level to pay attention to. So if we get back above that median line, get ready for median line acceleration, in my opinion. All right, and then we had S&P and DAX. Here's the S&P 500 on a long-term slope. It's pressing against massive, I guess resistance. I don't know if there's such a thing as resistance in the S&P 500, but you are getting sideways movement. Okay, is this going to end up as a triangle before it thrusts higher, or is this going to end up as a diagonal? 2564 would be the measured objective from this, this range, breakout range. Okay. And then the DAX, still looking for the longer term resistance level on the DAX, which, we've satisfied, I guess, the minimum for a third or a fifth wave from here, right? If you go 1, 2, 1, 2, 3, 4, 5, but your ideal level is this magenta line up here, and that's going to be up at 13,300, a little above there actually. So call it 13,315 or so over the next week. Okay, might be a big level to watch in the DAX. Maybe it has a clue about global equities and where they may find some sort of resistance. Okay, quickly, I want to look at pound CAD and pound Aussie because I've written about them a little bit recently. This was pound Aussie. Okay, remember we had a pretty clean looking pattern, A, B, looking like we might get a C lower now. So, excuse me, I'm sorry, I just sneezed. I was trying to hit the mute button before I did it, and I didn't make it in time. Thank you, Iman. All right, so look at 166 in pound Aussie for a low, okay? ABC, 166 is a big level anyway, as we've talked about it in one of the posts recently. Okay, but you could be forming yourself a big base to work higher from in pound Aussie. And then pound CAD is one that we've looked at here recently as well. Remember the weekly chart here, right? We're looking at support down on this thing, and we did get it back on 10.6. I guess that was on Friday, and we're bouncing or getting back into it again. But you could have with pound Aussie, or sorry, pound CAD, you actually could have a nice bottoming pattern here as well. And I just like the prospects of a higher pound from a trading basis, psychological perspective, right? I mean, everybody hates it. Everybody hates it. So taking picking your spots with cable, I kind of like it. I like the idea of, I mean, it's acting well here. We're back at 31.70. Everyone Brexit, everyone freaks out, and yeah. So and this is pound yen, by the way. Don't forget on pound yen, we did have. I mean, it's essentially you're looking at a retest of a massive breakout, right, on pound yen. And don't forget this one. This was a line, trend line that was resistance back here in August. It was support basically the day of the rate hike. Yeah, Mahai says pound yen might be interesting. Yeah, absolutely. That's you're right on it. And we're coming back into it now. So, if can we maybe ride back on this and test it and then go to 160? I actually think it's possible. So, yeah. Charts telling me that pound ain't so bad. Might be the great trade coming up here over the next couple of days or longer. All right. Okay, so I'm wrapping it up there. We'll get this archived for you as soon as possible. And I hope everyone has a great rest of their week and a great coming weekend, okay? All right, so take care, everyone. Jamie Saettele here, SB Trade Desk, signing off. All right, bye.